Welcome to the latest episode of the Intelligent Wealth Podcast. So let's dive straight into the show today. We're going to talk about gold, which is very much in the news these days because it's had a really glittering year, forgive the pun, the last 12 months. It's up, I think, around 60%. So we really want to talk about the history of gold and its role in the economy. And bring out some interesting points about it and help you to decide whether it's something that you'd like to invest in now or not, and to aid you with your research. So without any further ado, let's get into some serious performance figures from Carl Roberts about gold.
Yeah, thanks, Tony. So the reason why we are and lots of investors have been talking about gold over the last year or so is because it has been on a pretty rapid rise in terms of its price. So at the start of 2024, the price of an ounce of gold was priced at about $2,000. And at the time of recording today, which is in January 2026, the price is around $4,400, which is pretty much at all-time highs. So we've seen a 65% return over the last year in the price of gold, and 140% return over the last 5 years, making gold the top performer out of the traditional asset classes of the 2020s so far. But this is all in US dollar terms. So it's important when you're looking at gold prices and the performance of gold, particularly if you're a UK investor, and this podcast mainly aimed at UK investors, you need to look at the price and returns as well in UK pounds, because there is a currency difference there. So when I said before that over the last year in US dollar terms, the price had returned 65%, in UK terms, it's only 50%. And over the 5 years in US dollars, it's pretty similar, mainly because of the last year, the US dollar has weakened quite significantly against the pound. So that's always something just to be wary of when you're looking at gold prices in US dollars being a UK investor. If we sort of span out and look at the last sort of 100 years or so, so going right back and looking at a good history of gold and how it's performed, if you had invested £1,000 into gold in 1926, it would be worth just under £500,000 today in January 2026. Now, a little question for you both. Can either of you guess what your money would be worth today if you'd invested the same amount into a global equity portfolio 100 years ago? So bear in mind, gold has got to about £500,000. What do you think a global equity portfolio would be worth today?
I would say around 8 million.
Wow. A lot more than 500,000. So I'll just hedge my bets. I'll say 5 million.
Yeah, you're both wrong. 19 million.
You had to add our two figures together to get to the correct figure.
I should have said to you actually that global equity portfolio does include dividends reinvested, so it does give it.
Yeah, we were quoting it without dividends reinvested, weren't we?
Okay. But there is an important factor in play with these two figures when you're looking back 100 years, is because before the 1970s, the gold price was pegged to the US dollar, fixing its price artificially low. So when you look at the price charts before 1970, you'll often see gold in quite a straight line. So that does kind of mislead the figures slightly, because when you do it then from 1970, you can see that gold then tends to track kind of global equities much more closely. So yeah, so I don't tell you if you had a bit more information on the history of gold.
Well, some of it is anecdotal. I remember I was a student in the late 70s, early 80s, and I remember we had the Iraq war, didn't we, over oil. And I remember at the time, at the outbreak of the war, gold was $200 an ounce, and it rose very rapidly to $800. And I know since then there have been literally decades where gold hasn't risen in value. There was a long period up until a few years ago where it just had gone nowhere for many decades, which is probably why Warren Buffett is so damning about gold. There's a famous quote, but it's so long I can't remember the full wording, but it goes along the lines of something like, he'd rather invest in a certain number of companies that produce a certain amount of dividends, whereas gold is just a piece of metal. It doesn't produce any revenue because, like you say, with the dividends reinvested, makes a huge difference to the returns. And gold isn't one of those things. But a couple of areas I wanted to touch on before we get on to Awit's contribution is that there is an unknown amount of gold owned by different countries. And I think the two of the countries that we're uncertain about what their true gold holdings are is the USA and China, the two superpowers of the world. Now, China, they're just very quiet about how much gold they actually possess. They do import an awful lot of gold, but they're very coy about the true figures. Now, I've got some actual official figures here that say that China, at the end of the third quarter last year, had gold reserves of 2,300 tons, USA 8,133 tons. But first of all, gold has been vastly understated by China. You've only got to look at the level of imports. And if you look at the last 10, 15 years, it just doesn't stack up that they've got so little compared to the USA. With the USA, there is a big dispute over the true value of their gold because they've got a lot of gold at Fort Knox. I've got a figure here for Fort Knox, 147.3 million ounces, over 4,500 tons of gold. That's near to the figure I just gave you. But the trouble is, it's valued at 42.22. And you think, well, hang on a minute, why wouldn't they publish the true value of gold? Unless, of course, it doesn't exist. They haven't had an audit there for many, many years, at least 10 years, maybe 20, 30 years or more. So I'm just very suspicious. Why wouldn't you quote the true value of gold if you've got that much in reserve? So I suspect China has substantially more gold in reserves than the USA. If they had the audit and we got it properly verified, then we'd know the true figures. But I don't think either country is telling us the truth. So that's the interesting bit I wanted to bring in. Over to you, Awet.
Thank you, Tony. Yeah, gold has been very interesting. Across civilization, it's always been, the scarce value of everything pretty much. Among commodities, historically has driven value through civilization, and gold has been one of them. I think it's JP Morgan. I said, from most history, I think JP Morgan one time said, gold is money, everything is credit. I think to me personally, I always believe gold is pretty much money. I think historically has preserved, through thousands of years, its value has been picked up from, with inflation and so on. The same amount of gold can buy the same amount of things now, through history as well. So yeah, it hasn't been as straightforward. Gold has, it hasn't been a straight line, the performance, there was underperformance and so on. The world is changing now. And I think that most people are realizing gold value, right? I think Carl, you mentioned, the monetary system before the 1970s, it was based on, gold. But what we realize is it's difficult to scale the system that we created using gold only, because the wealth, the growth, and the innovation that we have today is because of the fiat money system. Because with gold, I think it's difficult to scale the economy and to grow. I can give you an example. Banks have the capacity now to give loans and so on. And I think the fractional banking system has created enormous amount of wealth. But with gold, you have a limitation. And I think the difficulty as well, the medium of exchange, you have gold cannot be easily tradable. And that's why I think you do need this fiat system has been great in terms of facilitating, medium of exchange and so on. It is true. The banking system is not perfect. I remember Henry Ford, he said, I think years ago, if people knew how the banking system works, it would be a revolution. And he is right in a sense that the banking system is not perfect, and the government has been using it because it's easier to print money rather than to be accountable. So it's been politicized throughout history. That's why I think the system is facing a lot of threat and is being manipulated and abused. Like, to give you a figure, since the I think since the inception of the Bank of England, the pound has lost almost around 70% in the last 40 years. And when we go to the Argentinian peso, it's almost, since not 2009, it lost almost 0.8%, almost pretty much wiped out. And you can see what's happening in Iran. Now, £1 in Iran is 1.3 million. So if you have a 1,000 in Iranian pound, basically you are a billionaire in Iran. But the problem we have is the billion doesn't buy much in Iran. So the fiat money system has been, it is being manipulated. I think it has been manipulated to a stage where I think there are a lot of threat now. There is a new money or system is creating, as you mentioned, Tony. The system is need to reassess, and I think the decentralization system is emerging. We can see the blockchain, the Bitcoin, and other payment form is forming, which is they trying to be outside of the traditional fiat system. And we can see we will see how those sort of payment system would move forward in the future, and how government would allow them moving forward. But it's difficult to see now moving forward.
Yeah, which brings us back to gold. Now, one of the things I've noticed with gold, like Carl made the point, it hasn't really grown that much. It has done this this century. It has so far. It's outperformed the S&P 500, but that's an unusual period of outperformance. Gold long term, over thousands of years, pretty much just preserves its value in terms of inflation. And the problem you've just touched on there, Awe, is that the fiat money system, the system we have currently, is fundamentally flawed, because governments can just keep printing more money, but you just end up creating more debt. And you can't do this forever. Eventually, there's a payday. You have to pay it off. You can't just keep borrowing more and more money. People's living standards are decreasing because the value of their money in their pocket is being devalued. So that's causing quite a big problem, and it's got to come to a head at some stage. Yeah, carry on.
You're right in a way that I think the fiat money system hasn't been perfect, but the people, I think if you look at it, all the startups, for example, if you have a startup, you need an upfront cost, you need a risk, right? The fiat system has played a great role in our society, giving those companies to invest and to become innovative and to contribute to our society. But the gold system is, I think, where the gold production is 2% a year, right? So it's difficult to scale it and to grow the economy, even when there is a financial crisis. It's difficult to control if you have a monetary system purely rely on gold and so on. And I do think it hasn't been perfect, but people who had used the fiat system, allocated properly, has benefited from it. And I believe most people, wealth has, if you put your money, as you mentioned, Carl, as well, that in an investment and so on, in terms of fiat money, you would have done really well. And you have to convert that into gold. You pretty much, it's a win-win for society, even though that's not perfect system we have, but pretty much the best alternative we have had so far.
I'm not personally convinced, but let's just stick to the gold issue primarily today. So what's your view of gold after Awe's contribution there?
Yeah, I think you've touched on a lot of the things that people are worried, or investors particularly are worried about more recently, and has contributed to the rapid rise in the gold price in recent times. I think a lot of investors are becoming nervous of the levels of debt, particularly in Western economies, the levels of inflation, the levels of money printing that are going to be required to keep up. I think most Western countries now are high spend, high tax, but even the high tax is not enough to keep up with the level of government spending. States are increasing in sort of government size. So I think all of this is leading to that sort of rapid rise in the gold price, as well as countries like China, Russia, that have seen that actually the US dollar being the reserve currency can use that as a weapon against other countries. We've seen that with the Ukraine war and Russia, and how US have frozen Russian assets all over the world. So I think a big part of increasing gold reserves with these countries is to try and ensure that they're not dependent on US dollars, and actually they've got something else as a backup. But looking more broadly and again longer term, why do investors in particular like to hold gold? Instead of just thinking of it as a currency in a monetary system, why do investors actually just like to purchase it for an investment purpose? And a lot of investors will say they use gold as a way to diversify their portfolio. So there's an investment framework known as modern portfolio theory, which believes that if you hold different asset classes, so that could be property, that could be gold, that could be equities, that could be cash, could be gilts, fixed interest. If you hold lots of different asset classes in your portfolio, you can reduce the overall risk of your portfolio, because the theory is that as one asset class goes down, because economic conditions mean that asset class is not favorable, so it's fallen in terms of returns, another asset class, the economic conditions might be more favorable for it, so that asset class will rise, so therefore offsetting the loss that you've seen in the other asset class. That's the theory behind it. But interestingly, when you compare gold to global equities, they can quite often behave the same way, which actually negates its diversification. So again, if we look back over the last 100 years or so, gold actually has a higher volatility level than global equities. And when we say volatility, what we mean is the sort of price swings from high to low. So yeah, it's got a higher volatility level than global equities. But actually, in performance terms, gold actually has a lower annualized return rate. So you're investing in gold, which is more volatile than global equities, and you're getting a worse return if we look at the longer term figures. In terms of last 100 years, gold has returned positive years 68% of the time. But again, when compared to global equities have achieved positive returns 78% of the time. So again, looking back, which is not always the right thing to do, the odds are saying that you're more likely to get a better return with global equities. Another big reason why investors will hold gold is they believe it's a great way to protect their purchasing power of their money against inflation. And again, longer term, this is true because over the last 100 years, inflation has averaged around 4%, but the gold price on average or annualized return is about 8%. So you're getting double the return inflation. But this obviously doesn't tell the whole story, because there's big periods or long periods where gold doesn't outperform inflation and can actually lose you money. So if we go back to the 1970s, when that peg was unhooked and gold price was allowed to freely move, it massively outperformed in the 1970s against any other asset class. So gold was way above anything else if you held it, throughout the 1970s. But if we go into the 1980s, that 10-year period in 1980s underperformed inflation. So you would have lost money in real terms in 1980s. And actually in the 1990s, it underperformed inflation significantly and produced a negative return across the whole entire period. So if you had started to invest in gold at the start of 19 and held it all the way through to the thousands, you'd have actually lost money and lost even more in real terms because it didn't beat inflation. But having said that, more recently in the 2000s, 2010s, and the decades so far, gold has beat inflation. So it's the summary of this part really is to say that none of this is a given. It's you don't like to say you can't time the market, but timing is important. You just won't know it until the future. So in hindsight, you have to get the kind of timing right, because otherwise you could really suffer in terms of returns. It's not a given that gold is going to be positive returner for you unless you're prepared to hold it for a long years. But that means 10 years plus. We're talking now sort of 20, 30 years.
Can I just ask you something, Carl? When you quote all these figures, are you specifically talking about the commodity gold, or are you talking about gold mining shares?
No, gold price.
Because investors do get confused between the two.
Yeah. No, gold mining is very different. I'll come on to that a bit later in the ways you can invest in it, but you're talking more of an equity there when you're talking about gold miners. This is actually the gold price of the commodity.
Yeah. And the other interesting point is that silver and gold used to have a certain price differential. And I can't remember the figures now. I think it was something like 50 times silver to gold price. But that differential's grown and grown and grown because silver's become less and less popular, even though it's got a lot more industrial uses than gold. because, of course, a lot of the use of gold is for jewellery rather than industrial purposes, although it does have some good uses for industry. And you can even use it in dentistry, can't you, as well? And even in space, it can be quite useful protection against radioactivity, like astronauts' helmets and things like that. I think it's also a very interesting asset, and I think Howard's dying to tell us about some of the interesting things he's discovered about gold in the last few days, because he keeps peppering me with these very interesting emails about it. So come on, Howard, let us hear some of your interesting stories about gold.
Yeah, I mean, in terms of like when we look at the whole world, right? The world is changing. I mean, we had rules, the international rules that were followed, the whole world followed after the Second World War, right? But you can see the world is changing. I think you can see even Donald Trump recently has, I think, ordered the US to withdraw from 66 international organization. So what I can see biggest beneficiary for gold is the world is changing, going from international rules that everyone abide by, just reversing that. And I think it becomes more, it gives gold a more advantage, because if you have the world is changing rapidly and not following the international laws, and everyone is following their own rules, right? Gold is pretty much the money that by default is the real money now. So this is very interesting. I can see, which helps a lot of in terms of gold price and so on. And the second one is, historically, we didn't have the gold supply has been around 2% a year, right? But what we've seen is the reason for that is, for most, I mean, some gold miners, this is not profitable for them to the price that the gold was trading at cheaper price. It wasn't profitable. But now gold has risen, as you mentioned, 60% last year, and is still up this year. Some miners are, they are suddenly their reserve is profitable, so they will start bringing more gold to the market. So there are a few things that will benefit gold in a real long term. And as I mentioned as well, I think you mentioned, Tony, central banks buyers are, the biggest beneficiary for gold moving forward, because as the world is changing, especially after the Russian sanction, most central banks realize their asset is not safe anymore, and they are trying to find an alternative to increase their reserve instead of the U.S. Treasury, and gold is pretty much the biggest beneficiary from here. One thing I could think of is, well, like in the last, we discussed, is the AI bubble? Is it a bubble? The market is trading a high multiple. Where do we go from here? Investors facing uncertainty from here. Where do we go? Market is trading all-time high. And I think some investors would probably go to gold to hedge the uncertainty in terms of geopolitical risk. We've seen what happened in the US with Venezuela and so on. So there is a lot of things that can benefit gold here to hedge investors' downside and to protect investors from this ongoing uncertainty. We can see what's happening in Iran, Venezuela, and so on. So the world is suddenly changing, and the market is implying a lot of probability of, there is certain things or exogenous shocks that would happen to the economy. In terms of those things, what would happen is investors would rather hold physical gold rather than, a gold that, you would rather have a physical gold ETF or physical gold that you can buy to store, because those sort of things would give investors more certainty, because gold is, as we said, for 6,000 years has been, preserved wealth, and it's been doing very well during a certain period. So I personally think that gold will be the key beneficiary moving forward as well.
Yeah, for some reason, you didn't answer the question about some of these interesting facts about gold. So maybe I'll mention one or two.
Sure.
First of all, gold is not indestructible, but virtually indestructible. You can just keep banging it with a hammer and it can be into tiny little specks. Virtually impossible to get rid of, apart from if you put it in acid, I believe. That's one way of eliminating gold. And gold, of course, has been around for thousands of years, and it's felt that it was created from asteroids striking Earth and producing gold, because it seems to be from outer space, gold. There doesn't seem to be a lot to mine in the world, but there is a surprisingly large amount in the sea. But as you explained in an earlier email, the problem is it's virtually, well, it's just too extortionate to actually physically try to mine gold at sea. It's just not worth it. Gold would have to be valued at a lot more than it is, and it'd be hard to find it even. So there are some very, very interesting facts about gold. It's a very interesting subject. There may be other undiscovered amounts of gold we don't even know about yet, like the sea was one that was mentioned. We always think of land, don't we? But what if there were future asteroids to strike planet Earth? We don't know. I mean, I'm not a scientist, but suddenly we could end up with like double the amount of gold we had before, and then that's going to have quite a big effect on the gold price. So I still think gold is more of a store of value. You can't use it as a medium of exchange. The only way I know you can do that realistically is with some of these gold prepayment cards, that you can have with MasterCard and Visa. I've got one myself. Mine is with a company called Glint, but they're not the only ones that do this. You basically use it like a credit card, but you have to prepay. You're not borrowing any money. And you can allocate your money into gold, which gets stored in a safe vault I think it's in Switzerland, but in this particular case. So you're not actually using gold to pay, but you draw down your gold reserves on your card. So I could literally buy you two guys a cup of coffee, use my Glint card, and I'm paying for it in gold. But that's the only way I know you can literally spend gold, because otherwise it's impossible, because you got these big gold block, and how can you lug them around and pay for things? You can't. It's the only way you could historically was perhaps with coins, gold coins. Now, the actual amount of gold in the world is actually quite tiny. I think you mentioned it earlier, that it's something like 20 meters by 20 meters by 20 meters, like a Olympic-sized swimming pool. It's surprising how little gold actually exists, and we've probably reached near the limit, haven't we? Like you say, you can only produce about 2% more gold every year. So all those things are quite interesting. And I can't help mentioning at this point the word Bitcoin, because, of course, I consider this to be digital gold. It has a lot of very, very similar characteristics. Okay, it's not physical, it's not shiny, it's not something you can use as jewelry. But in every other respect, apart from it being electronic, it's the same, because it's not a medium of exchange. It's a store of value, isn't it? And there's a limited amount that there'll ever be of Bitcoin. So there's got some parallels there, which I find quite fascinating. Anyway, enough of that. So, Albert, you're going to talk about market dynamics and factors that influence gold prices.
Yeah, I mean, as we mentioned, we pretty much covered most of them. But I think the biggest beneficiary for gold moving forward would be, the biggest central banks buying more gold.
Yeah.
As we said, uncertainty are rising, one of the biggest one. And I think at the same time as well, there's a demand for gold from investors, as we said.
Sure.
Uncertainty.
Sure.
Investors want to hedge the downside and so on. So there is a lot of shift for gold. In terms of like moving forward, gold is still, the time like this, as we mentioned, like the geopolitical risk, the exogenous shocks for the economy and the market trading at all-time high. This gives gold, pretty much a good upside for investors. I think there's last year, the reason gold price has risen is like the de-dollarization trade. The countries like makes around 45% of the global population. The BRIC nation try to form a monetary system which is more likely to settle in gold. And I think one of the reasons is driving gold price is those countries, and I think they're still buying gold. And moving forward, we can see gold is gonna benefit from this. But the reality is, gold has been rising in the last few years, so that we may expect a little bit pullback as well. It's not going to be a straight line.
Good point.
There's certainly, great benefit for gold moving forward. Lastly, I would say the global debt. I think through peacetime, most central banks have achieved significant amount of debt. And the debt to GDP is rising everywhere. In the US, is more than 100%. In the UK, just recently crossed 100%. Japan is more than 230 to 240%. So we facing a world is just being abusing the traditional fiat money system. And I think people are realizing that the system maybe we have overused it and we politicized it. Now probably we need a new system to be formed. And I think gold is one of them. As I mentioned earlier, I always like this quote by Henry Ford. He said, if people realize how the banking or the system works, there'll be a revolution tomorrow. And I think I can see the start of a revolution. People, the blockchain and other ways of payment. I think that this certainly people are understanding the internet is exposing the current system.
Okay, so if we were to invest in gold, Carl, what ways can you explain to the listeners you can invest in gold, and what are the risks for doing that?
You've got three main ways that you can invest into gold. Firstly, you could buy physical gold. So you could actually own a piece of gold. You can go to a gold broker, buy a bar of gold. You could buy even an old gold coin. And actually, you then have a piece of gold, which is valued. There's websites, gold brokers out there that will show you the price of the gold for the amount that you're holding or planning to invest in. So you could do that. And then obviously you've got the issue of, do you store that at home? Do you have it delivered to you and then store it at home? Obviously there's security implications with that. If there's a break-in, you've just lost your valuable piece of gold. But a lot of these gold brokers will offer storage vaults. So these vaults could be all over the place. They could be in different countries. But obviously, you could invest in the gold physically via a broker, but then they would allow that to be stored in a vault somewhere. And there'll obviously be extra costs with that because they're going to charge a storage costs. And one of the things I would say on that is that if you are buying physical gold and storing it in someone else's vault, is you want to know that it's ideally aggregated and segregated. So segregated from other people's gold holdings. So what you'll find with some gold brokers is they've just got a big pile of gold in a vault somewhere, and they'll just say, yeah, you've got, a share of that is yours. But other brokers will actually say, no, definitively, this bit on the shelf, these bars are physically yours. They've got your name on it. That would be a bit more of a foolproof way to do it. There are some good capital gains tax features that come with owning gold sovereign coins, because gold sovereign coins are still classed as legal tender, so they're not subject to capital gains tax. Because that's something to bear in mind, that if you have a bar of gold or a plate of gold and you've held that for a number of years and made a really good gain on it, you're then going to have to consider capital gains tax, because that will be liable for capital gains tax. But if you buy physical gold coins, sovereign coins, then there's no capital gains tax applicable to those gold coins. So that can be a useful reason for looking at the physical route rather than anything else. There are even specialist SIPs, so specialist pensions, that will allow you to invest in physical gold, again, in vaults. So there are pensions out there that allow you to do that. I haven't come across any kind of ISA providers that will allow that, but there is definitely SIP pensions that will allow physical gold investment. The alternative and slightly more simpler way to invest in gold is via a fund, mainly an ETF, exchange traded fund. There's two types of funds. You have to be careful with this, because some funds will go and buy the physical gold and will store it in their own vaults. So again, you've got a share. You don't actually own the gold. You own a unit in the fund that owns the gold. So there is you're slightly removed from it there, but that does then track the gold price. The other form of ETF that does this is they just try to replicate the gold price. So they don't own any physical gold, but they use financial instruments like derivatives to try and track the gold price. This brings in counterparty risk, because you're relying on other parties to honor the trades and things like that. So again, you're not actually owning any physical gold. You're just trying to benefit from the price of gold over time. But it is much easier to hold these types of products in your ISAs, in your SIPs. You can trade them easily. So there are kind of advantages to that. And then sort of the final method would be, we've already touched on it, is to look at gold miners. I mean, generally over the long term, their price can be sort of tracks the gold price, but there are periods where it doesn't. It can lag the gold price quite often, because you are actually investing into physical businesses rather than the metal itself. Same with the gold mining funds. So you do have to be careful of this, and it acts much more like an equity rather than actually tracking the gold price. So if there's a stock market crash, you'll quite often find that the mining companies will go down with everything else. That they'll have no relation to what the gold price is doing at that stage. So not technically an investment into gold, but again, it is an easy way to do it if you like that idea, because you can do it via your pension, your ISA.
Yeah.
So there's no one option is perfect. They've all got trade-offs, they've all got downsides and advantages. It's what suits you and what you're looking for and what kind of hassle factor you want and what kind of security and things you want, really.
Right. Now, Carl, you put us on the spot, Albert and I. So now I know how it feels when I put you two on the spot. I'm going to put you on the spot again today. When it comes, let's talk about your own money. Do you think now is a good time to invest in gold or not? Carl, what do you think?
Personally, I always like to invest in things that are not at all-time highs. So the price is tricky today. However, longer term, my personal preference is to hold a small allocation into gold, pretty much under 10%. I think the thing
will that be
with
the
gold,
commodity, not mining shares?
Yeah, the commodity, preferably physical commodity.
So you're in favour. You're in favour, basically. How about you, Albert? Would you invest in gold today, personally?
The stock market has been a great allocator of capital in the long term. Carl mentioned from what you give the figures, you see the historical performance of gold in comparison to stock market. The stock market has been, great generator of capital.
Will you invest in gold or not?
I still do, even though it's all-time high. I do think the gold still has a great place to play because I've mentioned, the whole world is changing. So gold has.
So how much of your portfolio would you put into gold?
I would say 10% is I'll be comfortable with it.
Well, interestingly, we're all agreed then. I'm the same. I would still invest some money in gold because it's a bit misleading just to look at it being an all-time high, because if you look at equities in the States and go back over many years, you'll find that they often reach all-time highs and continue to reach all-time highs because, let's face it, long-term share prices are going to rise anyway. The question is it overvalued or not? We don't really know, but I think some allocation to gold makes sense, I think. So all three of us are in consensus there. I probably wouldn't put more than 5% in of my own wealth.
I think just on that, Tony, there is JP Morgan does the ones that do the guide to the markets charts. I think it's JP Morgan. They have a really good chart which shows you current prices, what returns can then be expected over the next 10 years.
That's good.
And quite often you find that the higher obviously it is. So it doesn't say that you buy at all-time highs, and of course it will be all-time highs again in the future, but you don't know by how much more. And what it tends to show is that the higher you buy at, obviously your expected returns will be a lot less over the next 10 years had you bought at a lot of a lower price. So I think that does still come into play. I think with gold, though, you've got to look at it. I see gold as a defensive asset. So if you're an investor that wants to go for growth, I would not count gold in that that area. I would say gold is your diversified, your defensive asset that if things go wrong with the monetary system, you've got something that is scarce.
Yeah, makes sense.
And as a limited supply.
I wouldn't have too much in gold at the moment for the reasons you gave earlier, personally, Carl, but I do think some holding for defensive purposes makes sense. Anyway, guys, we've pretty much reached the end of today's show. We spoke for longer than usual, so it must have been a really interesting subject. I just hope the listeners feel the same way about it. We'll be putting links in the show notes as usual, and we can happily provide you with our one-page snapshot on gold if you'd like that to help you with your own research. Our next episode of Intelligent Wealth Podcast will be on Shopify, which is a company we really, really like. If you're watching or listening to this show on Apple Podcast, please do give us a review. It'd be very welcome. We do need to improve our ratings, and it does attract better interviewees and just makes it more fun for us because we can get a measure of our success. So really enjoyed the show today. Very good contribution for everyone. Just remember, these aren't recommendations. This is just purely our personal views on the subject. Do your own research. I just hope this episode was very good contribution towards your own research on the subject of gold. So without any further ado, I would close today's show.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.